here in the United States, we have some major issues. Right now, we are seeing unemployment and wages worsen. Unemployment has gone up, and wages at just an annual rate of 3.8% is the lowest level we have seen since July of 2024. According to many experts, this is going to be troubling. Not only that, there's an increased chance of a recession, and China just hit back Donald Trump with their own tariffs. So I'm going to explain what's going on at this time, why millions and millions of Americans should be somewhat concerned, but be watching and understanding what is currently going on. If this is causing you to tighten up your wallet and not spend money, well, I'm with you. Because right now is not the time to go and blow your money when there's a chance your job may not be secure and prices are still going up. So I'm going to break all this down in just a moment, explain what is going on and how you will likely be impacted. But before I do, all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. I know a lot of people right now are very scared. What is going on? Are we going to see this trade war between the United States and several other countries? Well, what China just did is actually sparking another trade war with China. And many people are very concerned. We are still seeing the stock market sell off. So if you have all your money in a portfolio, well, I'm sorry, because it is going lower. But good news, if you have some money sitting on the sideline, now may be the time to start to deploy some of that. But again, it's not financial advice. Look at this. It says U.S. payrolls rise by 228,000 in March, but unemployment rate increased to 4.2%. Okay, so we are seeing more people get hired, but our unemployment rate is increasing. People are simply dropping out of the workforce. Look at this. It says right here, non-farm payrolls increased 228,000 for the month, up from the revised 117,000 in February and better than the Dow Jones estimate of 140,000. However, the unemployment rate moved up to 4.2%, higher than the 4.1% forecast, as the labor force participation rate also increased. Okay, now I want to read you a few other things. Look at this one. It says Trump announced a flat duty of 10% against all trading partners, along with a wide menu of so-called reciprocal tariffs that already have provoked retaliation from China and others. That was one of the big ones. Okay, China hits back. It says China hits back at Trump tariffs with 34% duties on all U.S. goods. This is actually going to start on April 10th. So we have less than 1 week. Now, why 34%? Well, that's exactly what the United States is charging China. 34%. It's a reciprocal tariff. But according to President Trump, the 34% that we are charging is about half of what China is already charging us. So why is China coming out and saying that, you know what, we are also going to charge a 34% tariff as well? Well, according to multiple reports yesterday, that the numbers that President Trump showed on that big board, or the paper that I showed you as well, some of those numbers could be false. That's the problem. Is again, we don't know all this. So there's going to be issues there. Here's what President Trump said, though. It says China tariff live updates. Trump vows his policies will never change after China retaliates. This is part of the issue. China against the United States. It's nothing new. We've been here before, but China does not want to pay the tariffs that President Trump is imposing. President Trump says, no, you have to. If you want to participate in our economy, you need to pay these. Well, China's thinking, maybe we just won't participate in your economy and you will see what happens at that point. Well, look at this, because this is where things get very, very interesting. Okay? It says China retaliated against U.S. President Donald Trump's latest tariffs with a slew of measures, including levies on all American goods and export controls on rare earths. Yeah. So now there's export controls where we are going to see less rare earth materials come to the United States. We receive a decent amount of rare earth materials from China. Not only that, we also receive ingredients for medications from China. So for the United States to really anger China at this time may be troubling, because that's going to cause prices to explode, according to multiple experts. And this is why the next thing is a major problem. Look at this. It says JP Morgan raises recession odds for this year to 60%. 60%. I said this before, that there were reports from 30 to 50%, but there were also multiple reports saying that no, it was closer from 60 to 75% chance we dip into recession this year. But then there's an increased chance that between this year and the middle of 2026, we also dip into recession. Some are saying it's up to like 80 to 85% chance we dip into recession. That's a very big problem, because that means we are going to see more people lose their jobs. Layoffs are going to increase. I want to show you this though. Look at this right here. I want to show you some of these numbers. These are the important ones. It says the March numbers, though, point to a still strong labor market. Though the January and February count saw substantial downward revisions, so after they were reported, there were downward revisions. In addition to the cut of 34,000 from the initial count from February, January's growth is now at just 111, down 14,000 from the previous estimate. Yeah. So even though we're seeing 228,000 people or payrolls rise this past month, expect a downward revision. Here's another one. Average hourly earnings increase 0.3%. That's good, right? Well, somewhat. Says it's in line with forecasts, while the annual rate of 3.8% was 0.1 percentage point below the estimate and the lowest level since July of 2024. So we are now seeing that the average hourly earnings, they went up by 0.3% for last month, but now it's just 3.8%. This is the lowest level we have seen since July of 2024. Here's the problem. Average hourly earnings are not moving up as quickly as some costs, right? Home costs still going up. Even though right now we did see the 30-year come down a little bit, so interest rates are coming down just a little bit. But the reason for this isn't the Fed. The Fed is holding firm. They haven't moved. But according to reports, many traders are believing that the Federal Reserve is going to cut rates 4 times this year, simply because we are seeing so much pain. So much pain. Unemployment is going up. Keep in mind, the Federal Reserve has 2 jobs. Okay? They want price stability and maximum employment. That's what they want. Price stability right now isn't really happening. Yes, we're sitting at a 2.8% inflation rate. That's not horrible, but some expect we could easily get up to 4%, especially with the tariffs that have just been placed on other countries, because we are going to absorb those costs. That's an issue. So price stability, not really there. But maximum employment, we just learned that unemployment went up. We're now sitting at 4.2%. Okay? Here's the next one. Look at this. The average work week was unchanged at 34.2 hours. That's good there, that we aren't seeing a reduction in hours. Some people are. Okay, just to give you an idea here. And so I can't remember exactly how this is calculated, but here's what you need to know. That there are the average person. Okay, so forget the numbers for a second. The average person, let's just say there's 10 people at McDonald's. Okay, I'm just using McDonald's, but no, there's no official report on this. But let's say there's 10 workers at McDonald's, and McDonald's decides they're going to lay off 3 people. Here's what normally happens. As they lay off those 3 people, the other workers have to take on the roles and responsibilities of those laid off workers, meaning their hours are likely going to increase. So for some, they're getting laid off. Others are seeing their hours increase simply because they're taking on additional roles and responsibilities. Here's the problem. They may not be getting an increase in wages. They are just getting an increase in hours. That's it. So keep that in mind. That's likely what's happening here. That's likely why we're seeing the average work week not change. I think this is like the third, fourth month that it hasn't changed. So that is good. The average hours are staying steady, but exactly why are they staying steady? That we don't know. So that's what's happening as of today. Again, there's a lot of talks, a lot of speculation. What's going to happen? Is President Trump going to roll back these tariffs? I don't think he is, especially when he just said that he will never change his policies after China retaliated. So I don't know what's going to happen. All I can tell you right now is just be prepared, because we expect more layoffs. We expect there's going to be changes in the workforce, whether it's hours, whether it's your wages, something. It's going to happen. I expect businesses are going to close. Right now, I've been talking to a lot of friends of mine who are doing like drop shipping, who are doing stuff on TikTok. They are having a very difficult time because prices continue to just explode. And it's very difficult to run a drop shipping business if you do not know what your cost is coming from China, or if you're even going to get the product. So right now, a lot of my friends doing the online stuff, they are struggling, but just understand this isn't going to happen just for the drop shippers. It's going to happen for all retailers here in the US. So I was getting more information on this. I promise I'll bring you all the latest news and updates, but that is what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.